Welcome back to Trendcenter. I'm Art Vandelay, and with me as always is my co-host Jay Peterman. On this week's edition of the show, we are analyzing Potash Corporation, which is a large corporation in the agriculture industry. Potash has built the world's largest fertilizer enterprise by capacity on world-class potash resources and high-quality phosphate and nitrogen assets. Potash has a strong position in the market with a huge amount of assets and an essential monopoly on the raw material resources in the country, owning a considerable amount of potash harvestable land in Saskatchewan and New Brunswick. They are sitting very well with few global competitors and high barriers to entry in such an expensive industry. On the flip side, they have a high reliance on fuel, which has been a continuously increasing expense over the years. And as a corporation distributing goods globally, they could possibly run into transportation bottlenecks and face EPA restrictions, increasing costs in certain quarters.
The agricultural industry is like any other industry in the world. They are susceptible to the economic factors as well. The credit crisis and the volatile markets are something that every industry should be aware of as possible threats to their business. Now, looking up on the bright side for potash, we can see that in the future they're about to open a $100 million factory in West Indiana. Now, this is a huge opportunity for them, as well as the overall global demand for fertilizer. We're seeing a huge increase over the last few years. 2010 saw a 5% increase, and 2011 we're seeing a 2.5% increase. Overall, this means that people want fertilizer. As well, we're seeing increased crop costs for farmers, which is pushing them to have higher productivity margins, which means that they want more out of their fertilizer, which is perfect for potash, and they are looking to satisfy that need.
Joining us today on the panel is Marty Funkhauser, Jay Peterman, and AJ Pennypacker. So starting with you, Mr. Funkhauser, how does potash stay ahead of its competitors in terms of research exploration to find new deposits?
Resource exploration and development in the industry was primarily driven through grassroots exploration through the late 90s and early 2000s. This was when companies like Potash would go and get a team of geologists to go and explore new areas for the resources to try to find new inputs for their products. Since the financial crisis of 2008, however, the industry's moved towards a more deposit appraisal approach, which is where they try to get more efficiencies and find more resources from their current areas and situations they're already in, which maximizes their infrastructure.
Oh, excellent, excellent. What's your take on this, Mr. Pennypacker?
Well, in the industry, pursuing junior mining companies is becoming increasingly important in resource exploration for growth. By pursuing junior mining companies with solid research credibility and proven access to resources, this limits the risk that the standard mineral exploration can cause.
True, well spoken. So, Mr. Peterman, how important of a role do capital markets play in the big picture?
Well, Mr. Vanderlei, if I can answer that bluntly, I would say they're a huge role. They're actually probably one of the most important. Right now we're looking at about 57% of the mining companies in the world are on the TSX. So what that means is that any company involved in mineral extraction is absolutely indebted towards these markets. They really need them, and it creates a good partnership. So any company looking to do business in this industry should definitely look into the capital markets as a strong asset.
Great, all great points, gentlemen. Where do you see potash in the next 2 years?
Well, frankly, I think it could be a pretty tough 2 years for potash. I mean, the global economy is in a very dire situation right now. Current debt woes in multiple countries all over the world leave nobody unexposed to possible problems, and this could result in protectionist measures done by governments, which would severely impact potash and companies like it, their ability to export their products, and that would have a significant impact on revenues. Rising fuel prices are another problem that potash has continually had to deal with over the last 5 to 10 years, and we feel like that's going to continue at our analyst table here. And yeah, we feel like it could be a pretty tough couple of years for potash.
I'm going to have to say right now that Funkhauser is totally wrong on this one. Right now we're looking at Canada's doing the best in the world wide, coming out of the recession compared to everyone else. Global demand for fertilizer is at an all-time high. We have global population increasing, which means more people that need food. More food means that you need more fertilizer to grow it. The only way I can see for potash right now is going up. They are bound to be a very successful company in the next coming few years, and I don't agree at all with what Funkhauser said.
Fertilizer and Peterman both made valid points, but I think they're both on two drastic extremes. I think that a company like Potash over the next 2 years will probably stay close to where they are, stay in the middle. There's a chance that the market will start to struggle, but Potash is in such a good position to stay afloat because they are in a market that should be able to deal with major market changes. As the importance of the industry to Potash continue to see profits, especially with such a large market share, Potash will stay profitably as they are a fundamental need for fertilizer, and there should always be.
Great points, gentlemen. Thanks a lot for coming on the show. It's always a great time. You're not going to want to miss next week's edition. We're going to have Louis Carlson in from the University of Wisconsin. His research is on Can Bees Think? You're not going to want to miss it. Thanks all for joining us, everyone.